We are continuing our series on baggage that an offer on your home might contain, right? So things that may put you as a seller at risk when you're selling your home. When you're comparing, maybe you have multiple offers, maybe you just have one. Today's topic is loan type. Or type of financing that a buyer is getting on your property. And this is important because not everyone's qualified financially to buy a home. And so, number one, you want to have a pre-approval letter. Make sure it's from a reputable lender. Make sure the contact information for the lender is on that pre-approval letter. And don't be afraid to call that lender and have a conversation. Sometimes you can learn a lot from what they say about the buyer. They obviously can't disclose personal financial information, but they may be able to give you a warm fuzzy about the financial position that buyer is in and that they indeed can buy your home. 4 main types of financing a buyer can get or have to buy your home. And we'll do this in order of lowest risk to the seller to some of the higher risk types of financing. And so number one is cash. Cash is great because you don't have to worry about a financing contingency. You don't typically have to worry about an appraisal. And you can close faster in as soon as, 5 to 7 days if you want to do it that fast, if both parties are able to do it that fast. So cash is king. It is the lowest risk type of financing for a seller. Number 2, a conventional loan. All right, conventional means it's not insured by the government. Those are typically backed by private mortgage companies, banks, the standard lending institutions that you see on TV or in your community. So conventional loans are great because they do typically require more of a down payment from the buyer, and they also require a higher credit score than some of the other loan types. So conventional loan, again, make sure you have a pre-approval, very important. Number 3 and number 4 can really be interchangeable. They're about the same risk level to a seller, and please know that I am not discouraging either of these types of loans. I'm simply providing information for sellers to look out for. So number 3 is an FHA loan. FHA is great for buyers who may have a lower credit score and or do not have as much money to put down as a down payment. Now, what's risky about it to the seller? A couple items. So the lower the down payment and the lower the attractiveness to the lender, the buyer is, the higher risk it is for them to loan the money. They want to, obviously, whoever's lending the money wants to know that the buyer's going to be willing to pay that back over time. And so somebody who is less financially qualified is higher risk to both the financial institution that's generating the loan and the seller. FHA loans are backed by the federal government and insured. One thing to add to the cash topic is that if you receive a cash offer, make sure you get a proof of funds from the buyer. So that can be a bank statement, some kind of account statement showing that liquid funds in that amount are available. And if they say they're going to liquidate assets or a retirement account or something, sometimes that takes time. And if they don't start that process until the day you're supposed to close, that closing is going to be delayed. So just make sure you know where their money is coming from. All right, back to FHA loans. So what I'll say last about FHA is that the appraisal process is more strict than, say, a conventional loan. So they're more strict on the condition of the property, and they're more strict on value. So again, back to the risk. They want to make sure that this buyer that may not be as financially qualified as a conventional loan buyer isn't purchasing a home that they can't maintain, one that needs a new roof immediately when they move in. So anyway, that appraiser, if they see any rotten wood, deteriorated wood on the exterior, peeling paint, things like that, deterioration, they are going to flag that, and they're going to require that it be done before closing. And then once it's done, the appraiser has to go back out and make sure it's been done before they give it their final approval. And finally, again, could be number 3 or number 4, VA loans. VA is a similar level of risk to a seller as an FHA loan for the same reasons, right? A lot of times it's a much lower down payment, leading to higher risk for the lender, and in turn they're going to make it a little bit harder on the seller on the condition of the property and on the value. I've had more FHA and VA appraisals come in low on value than conventional, and that's just because the lending institution is more careful about how they're lending on those loans. And again, with the condition of the property on VA, peeling paint, deteriorated wood, and in some cases, if there are 3 or more stairs anywhere inside or outside of the home, they're going to require that a handrail be there. In some older homes, there are not always handrails in those places because that was not required by building code when those homes were built. So that wraps up our kind of analysis on loan types and how they may affect a seller. I would encourage everybody, number 1, if you get a cash offer, get proof of funds. Number 2, if you get a financed offer, look at the loan type. It's conventional, FHA, VA, you kind of know what to look for now, and you know what your risks are. We don't always know what a buyer is putting down for a down payment. That's not necessarily the seller's business, but if you can find that information out, that's good for you to know as well. Again, back to the risk factor. My name's Ben Nemec. I'm with Team Nemec at Keller Williams Realty in Huntsville. Thanks for watching.